Hello and welcome to the weekly outlook. We have actually got quite an interesting week next week. Three sort of main currencies in focus: the US dollar, the pound, and the Canadian dollar. Now, starting on Monday, we've got a Fed announcement which is due to discuss the discount rates charged by the Federal Reserve banks. Um, could be market moving, but what I'm more interested in relation to the US dollar and how it's going to affect some of these currency pairs is what's due out on Wednesday, where we've got core retail sales, PPI month on month retail sales at 1:30 on Wednesday. Now, obviously, we've got quite a few currency pairs that we trade, which are relevant to the US dollar, and some of the main ones here that I'm looking at are the Australian dollar, the Euro US dollar, and the US dollar Japanese yen in relation to those announcements. Now we've had obviously we've got this serious consolidation pattern going on the Euro US dollar at the moment, and this is a little bit of an issue with with regards to where we think this euro is going to go, because obviously we've had some good and some bad data coming out, and some different hints at different things regarding the ECB and the US dollar. But the where things stand at the moment is we did have some fairly dovish comments from the Fed, and there is a bit of a sort of a drawback on their interest rate cycle, which they started in December. Now, there's many analysts which believe that they're going to raise interest rates two more times this year. Some are suggesting that it will only be raised one more time. So it's kind of a little bit in the balance. But at the moment, the market in itself has really sort of priced in the fact that the Fed are only going to raise interest rates once, one more time this year. So due to that, we've had obviously the euro has pushed back up from its low levels, and it's on this kind of upward trajectory at the moment. But it's come to a very sort of substantial resistance level around about this 114. It seems to be struggling to get through this 114 level, and it keeps dipping back down below it each time it tests it. So really what we want to see is for us to be able to take sell positions, which is where I'm leaning to, more biased to sell positions, especially if we get this good core retail sales figure and we get a good PPI month on month and a retail sales figure and a core PPI on Wednesday. I'd like to see that euro break out to the downside of the 113.260 level. Okay, this is where I believe this would be the best opportunity would be to take it on that breakout. I think taking it beforehand is just going to be asking for trouble, as it could reverse and head back upwards. If it breaks out to the top side, then buy positions around about 114.60 and looking to trade it up to 116, even 117. Okay, so now if that's the case, then we could be looking at the beauty of the consolidation pattern is it gives us a real good reference to where we can put our stop loss. So, for instance, if it breaks out to the downside of 113.20, then we can have a stop loss at 114.60, and if it breaks out to the top side at 114.70, 114.60, sorry, then we can have a stop loss at 113.20. So it gives us that nice clear pattern of where we can put our stop loss and how we can play it from there. So if I just put across the lines across there, then you can see that a little bit more clearly. That little consolidation pattern I'm talking about. Okay, so that's really how I'm looking at playing the euro through next week. So either looking for that breakout to the top side or the breakout to the downside. I am biased on the downside though because of the quantitative easing program, and because the US dollar, there's still that divergence between the two central banks. Which should cause really a downside in the euro, but it doesn't necessarily mean that the upside boundaries haven't been completely tested yet. So we've just got to be aware, although we are bearish on the euro US dollar, it could still have a little bit more upside to go. But this is the sort of trading pattern that I'm looking to follow next week. Okay. Okay, so that's the first US dollar trade, the euro. The other one is the Australian dollar. Now we have the Australian dollar. The economy at the moment is improving somewhat. The Australian dollar has been, I would say, has been weak strong. Okay, so when I say weak strong, I mean it's getting stronger, but it's a quite a sort of a feeble strength at the moment, and it could change quite dramatically. But what we have had, again, the same sort of situation as the euro. We've had quite a considerable upside in the last sort of few weeks, which has driven that Aussie dollar from its lows of 6,850 all the way back up to 7.5. So, and as you can see, I've got a bit of analysis drawn on here already, where I think the Aussie could go higher, but I think we need to see this retest of a 50% pullback, a retest of this support level here around about 7,383 before it makes that bounce. So, it's quite feasible to trade it down from that. And in fact, we did take a sell on this last week in the live room. I'm going to be looking to sell it again, pretty well much from the same price at the moment as it dips through that current pivot point, and looking to trade it down to this boundary again with a stop loss above where we've got this. I mean, this one we can afford to have a tighter stop loss. We've got a nice candlestick pattern that's developed there with this pin bar here, and we can start to consider our stop losses around about 7,589 and look to sell that down to the 7.4 area. Okay, so that's the Aussie dollar. There's no particular news out on the Aussie dollar to drive that. These, again, I'm looking at these currencies being driven by that US dollar on Wednesday. And the last one I'm looking at to also drive is the US dollar Japanese yen. Now, we've had a considerable downside on the US dollar Japanese yen of late. Due to obviously this Japanese yen strengthening, the BOJ have expressed concern about the continued downside of the Japanese yen. You see my original analysis here. Once we get that breakout of this level, I'm going to be looking for that pullback and then looking to resell it. But the pullback level is to 110.93. Okay, now at the moment we've got this considerable downside. I'm looking to see I think it's been overdone pretty much to the downside without a decent sized pullback at the moment. So I think it's time we had a decent sized pullback, and I'm expecting to see that happen next week. So let's just see if I'll put an arrow in here and see if that makes sense. So we're looking for that pullback up to this level. Okay. And then again to sell off to the bigger picture, as originally written in the very start of the year. I wrote the same sort of analysis which depicted areas of confluence on the way down, and I think we've just this was one of the areas of confluence. In fact, I'll see if I can find that in a second. Let me just format that, keep it all tidy. There we go. So that's the sort of area that I'm looking to run through next week. Let me see if I can find that original trading plan that I had for the US dollar Japanese yen. I don't remember if I posted that or not. Let me see if this is one of them. This is kind of this wasn't the one that I was looking for, but you can see how that's played out so far to the downside. Okay, I can't find it. We basically had a load of these a whole year, well, nearly a year and a half's worth of analysis for the US dollar Japanese yen, showing areas of confluence on the way back down to the sort of the 100 level. At the moment, that's got a long way to go, but we'll see how it materials. But at the moment, it's playing out according to the original analysis, which is written when the price was around about the 120 area. Okay, so they're the currencies that I'm interested in regards to the US dollar on its own. Now, the US dollar, the pound US dollar is the other one which has got quite a bit of data coming out on it. I am looking for further downside and a retest of this 1.4 level, and I expect it to sort of hang around there. You can see the original analysis here, which is to retest the 1.4, and it kept stopping around about this 1.4050 level. I would like to see it retest that 1.4, and I think pressure building on the lead up to the referendum is going to be mounting quite nicely and pushing that down. Now on Thursday, first of all, we've got the CPI data coming out on Tuesday morning year on year, which is expected to come in flat at 0.3. So not expecting that to affect the market unless there's a big change in that. If there is a slight tick up in CPI, then it could give us an opportunity to sell the pound from a higher price. Okay, now if that's not the case, then moving through to Thursday, we've got the MPC official bank rate votes. Again, I'm not expecting too much of a change on this. The monetary policy summary, I'm not expecting too much of a change. In fact, all the data that's coming out there, I'm not really expecting too much of a change. What's really of interest on that Thursday is the CPI and the core CPI coming from the US dollar. Now, again, looking for that strength in the US dollar to bring these currencies down. I don't think any of the pound data on its own is going to move the market. The only thing it might do is give us a little bit of a spike up where we can look to sell it. And I think anything between 1.4150 and 1.42 is going to be a great selling opportunity to sell this back down to the 1.4 level next week. So we're going to be looking at that from Tuesday onwards. Now the only other one that I've really got interest in is the Canadian dollar. Have got a rate statement out as well. Monetary policy report, BOC rate statement, overnight rate. Not expecting them to cut rates by any means, and I don't think they'll raise rates in this session alone, but it's really the statement that we want to be interested in, and I think we're going to find that they're actually being a little bit hawkish at the moment, but we do seem to find this level of support round about the 128, 129. But I suggest that it could possibly duck back down a little bit further. If we take it to the daily chart and scrunch it up a bit, you can see that the huge rally that we've had on this due to that weak oil price, which does seem to be holding its recovery at the moment. So I think looking at that in that light, I think we could see this 50% retested around about 12665 at the moment, as long as that oil price holds its own, and maybe even the 122 again, dipping back down to the 61%. Okay, and then I think we'll start to see this to consolidate for a while, unless the US dollar it does suggest that further monetary policy easing could come into play, or if they don't do a rate hike at all. Okay, so that's it for this week. Thanks very much for watching. I hope you can make some pips. Cheers for now.